everyone, and I'm Angela Ang. I represent TRM Labs, blockchain intelligence company. We're in the compliance space, and I'm very pleased to be here moderating a panel of absolute experts to talk about, basically my favorite topic, which is compliance. And the topic today is digital money and compliance. Anthony did a really good job of introducing that, but let's just break it down into a little bit more like layman language, right? What do we mean when we mean programmable compliance? And feel free to disagree. There's a pigeonhole where you can submit your questions as well, so we'll try and address some of them here on the panel today. But I think we're really talking about the idea of integrating compliance into the very design and the fabric of financial systems. And I think in this day and age, we're talking about it a lot more because that rise of smart blockchain, smart contract technology has really enabled this programmability. Smart contracts self-execute when conditions are specified in their code are met, which is basically what we mean by the idea of programmability. And we've seen that programmability already being applied to many use cases. But I think today what we're focusing on is the compliance and risk management use case. So I would like to invite my panel of experts that really need no introduction, but if you could just oblige us with an introduction about yourself, your organization, and tell us a little bit about what excites you about programmable compliance. Maha, let's start with you.
Good afternoon, everybody. I'm Maha Dimachki. I'm the BIS Innovation Hub Centre Head here in Singapore. I worked in the private sector and the public sector. As a regulator, I think you start to realise how important compliance is, and actually how it could be a real enabler to businesses. I think when we think about risk management and compliance, as a fintech community, I dare say, and please challenge me on this if you feel it's unfair, I dare say that you might think that it's a bit boring and not very cool, but actually I think it's very cool. And I also think that programmable compliance is compliance by design, and you can really innovate and experiment with this. And I think the experimentation that can happen within this space, not only can it help the ecosystem, but we could come up with some really cool solutions.
Love it. Tianwei.
Good afternoon, everyone. Thanks, Angela. My name is Tianwei. I'm one of the co-founder and CEO of StraitsX. So StraitsX is the issuer of XSGD, the Sing-dollar-backed one-to-one backed stablecoin that's been out in the market for the last 4 years. And we are also the issuer of XUSD just recently, the US dollar-backed stablecoin. Both are actually right now, I'm very happy to share, as of 1st of July, in early compliance of the upcoming well-regulated stablecoin regime that MES have published and issued. In the area of the compliance by design, I think this itself, we as an operator is also pretty excited about, because in my another hat that I wear is that besides StraitsX, I'm also co-founder of FAST and XFirst, which have been a major payment institution for the last 10 years that have been operating in both Singapore and Indonesia. And as a payment acquirer, compliance is a day-to-day discussion for a lot of the work that we do. And where we see here that a transfer from using the traditional payment rails into a blockchain-based one, besides the standard stuff that every one of you have been hearing a lot about in terms of faster settlement, instantaneous clearing, I think the programmable nature of the blockchain, the fact that it is Turing complete, brings about a whole new set of capability. For example, I think first highlighted by MES 2 years ago in his policy paper under Project Orchid, the concept of purpose-bound money, and how itself can be a policy wrapper for all of the regulation that has been come by. Case in point, this is something that we are exploring aggressively on our end, is that in the form of payments, there has been regulation and policy around a lot of exemption for specific payment use cases. For example, in Singapore, cross-border payments for inbound to Singapore, if it's meant for goods and services, that is for known FI as a source of fund, the AML-CFT risk of fail is considered to be really low, and that allows, as operators, a very light touch on the processes that's needed to handle this. These, in turn, reduce costs. And that itself are the concept that we can bake into the operation on the smart contract itself that automatically whitelist merchants that are only for goods and services and ensure that the transaction size are limited to certain amount that makes sense for the payment and services itself. And by default, they will reduce a lot of operational overhead that we have to do to onboard each of these operators and also reduce our cost of operation on all. So this is definitely something that I think that unlocks the potential because of the programmable nature of the blockchain.
Thanks, Tianwei, and I think we want to dig into that a little bit more. But Humphrey, turn it over to you.
Good. Thank you very much. Humphrey Valenbreder, CEO of Partior. I had 2 board members in the previous panel, so they spoke a little bit about my company. What we are is a next generation cross-border wholesale settlement network. And coming to the question about programmable compliance, I think in general there's a few things that you can say about this. I think compliance in the financial services is the license to operate. I think if we're not compliant, we've seen the risks that are associated with being not compliant. You lose your license, but that is only the result, because the real risk that we run is that the system is being abused. And that is what compliance really solves for. The other thing is, Alex of the previous panel mentioned the cat and mouse game, the Tom and Jerry. What you do see is that with new technologies entering the financial services space, be it blockchain, be it crypto as a way of having digital cash in the system, the old ways of being compliant don't work anymore. You can't do a paper-based control of your client and assume that you know everything in terms of transactions or know your customer. The new technology imposes upon the financial services to play and catch up with the trend in technology, and technology goes faster than the financial services typically. So the role of compliance and programmable nature of that in the blockchain space is for us to make use of these means to stay ahead of how the system can be abused. If that makes sense.
Yeah, absolutely. And I think that's a huge debate in the digital asset regulation space right now. You know, there's this concept from the Financial Stability Board of same risk, same activity, same regulation. But the fact is, a blockchain wallet address is set up very differently from a bank account. And the way that you do due diligence has got to be different to actually achieve the same outcome. But on that note, I want to turn to Maha. You know, as the former regulator, you have really seen the space from multiple sides at the UK FCA and then running operations from Pay.UK, and now you're leading cutting-edge innovation in this space actually among regulators. Can you tell us what is top of mind for regulators when it comes to payments compliance, and how can programmability really help to achieve some of these outcomes?
Thanks. What I would say, if I may actually, in terms of same risk, same activity, same regulation, I would change that to same regulatory outcome, which is a slight nuance and will allow us then to consider what are these new technologies. And as long as we're thinking about outcomes, I think that's it's a really sort of important distinction. So we're not then rigid in specifically, it doesn't have to be the same regulatory tool. And I think it's an important distinction to make, so I just wanted to make that point. But I mean, what's top of mind? I think what's top of mind for regulators should be what is top of mind for all of us. When we think about the financial system, we're thinking about the integrity of the financial system. And without the integrity of the financial system, we don't have confidence in actually, you know, operating in the financial system, consumers consuming, investors investing, and so on and so forth. The economic activity will suffer as a result. And so it's of high importance to regulators, but my argument to everybody is it's of high importance to all of us. And so that, I mean, obviously they care about the integrity of the financial system. We know that, actually I've got a few stats that I'd like to share with everybody. And we probably need to always remind ourselves that when we talk about financial crime, there's always illicit activity behind the actual money laundering or the scams or the, you know, there's either human trafficking or drug trafficking, you know, illegal activities that affects lives. And I always like to kind of bring it back to the human side, because this is what we're dealing with. And that's why it's so important for all of us to ensure that we are playing a role and it's not just the regulators. But I mean, in 2023, 3.1 trillion US dollars were laundered through the financial system. That's a huge number. 485 billion was estimated to be global fraud. And the amount money laundered in the financial system was estimated to be between 2 to 5% of global GDP. And we don't recover a lot of that at all. So the problem is real, and compliance costs are going up. So that's not an equation that actually makes sense, right? And for that reason, I think where we can use technology, and this is something that I think regulators are starting to engage with, because we've seen that with actually the popularity of Project Mandela. We just had a showcase, a technical showcase, and it was oversubscribed. For a compliance type of project, you know, we try to build public goods with central banks to be able to kind of put out there for the benefit of everybody to look at the work. It's been very popular, and because of the outcomes and the results that it's shown, and this is a project where central banks, regulators, and the private sector came together. So I think the problem is real, and there are solutions out there. I think I'd like to talk a little bit about some of these solutions in maybe the next segment, yeah. but something that we can tackle.
Yeah, I mean, I absolutely agree with you, you know, both as an ex-regulator and also in the industry. Compliance is a business enabler, right? It's about making that growth and innovation sustainable and building trust with your users, with your stakeholders at the same time. And on that note, I would like to invite Humphrey and Tianwei to reflect, you kind of react to what Maha is saying from a business perspective. You know, how are you thinking about programmable compliance and compliance in general to kind of build those long-term outcomes, and you know, how can really that programmability element really sharpen the ability of compliance to play the role of a business enabler?
Okay, thank you. Yeah, I think it's interesting, and I think it's indeed a different perspective. I think from the public sector and the regulatory side, it's about avoiding that things go wrong. For me, in the position of having a commercial organization, I also want to turn it into an opportunity. And maybe that's the definition of a business enabler. But what I think is we should use these type of technologies for my customers and their customers to create chances to grow faster than those that stay behind. Because like was said, the cost of compliance goes up, but it doesn't have to be relatively compared to your competitors if you choose at the right moment to innovate ahead of the curve. And I think so it's a different perspective, but they go hand in hand. But what I want to advocate for companies like myself, and probably yours as well, is by us stepping in the shoes of what our customers and the customers want, we enable our customers to be ahead of the curve and keep their costs relatively lower than what the other ones still do with the traditional means and ways.
Thanks. Just to add on to that, I think we really think of it from an operation perspective here at StraitsX and FAST, because ultimately we have been a payment service provider for the last 10 years, and how this impact from our cost side will translate to how we have to charge our merchants and our client. And if anyone is in the payment space, you will know that the MDR space is a race to zero, and operationally cost is always a major concerns for a lot of our clients. And the way we think about it, like I mentioned earlier on here, is how can we translate a lot of those policy exemption and policy, good policy that has been given out that can help reduce the load itself into something that we can operationalize in a tier-based approach, right? Because a lot of the regulation has been, good regulation been putting out, have given us exemption and for certain activities. But in reality, on the operation side, when we onboard new merchants and new clients, we probably have to do the full DD process, because you can't really control what your client is doing unless they say that they are doing. And usually what we were dependent on is actually they having a license or a track record of actually doing it in compliance, right? And this is a shift in the way of thinking when you have a blockchain programmable compliance built into the design of the framework, that a lot of this lower tier, lighter touch approach of on exemption can be implemented in reality without us having to go to the heavy lifting from day one. Because they might be just wanting to make a very basic payment that does not justify for us to spend a couple of different weeks on it, sometimes even months, checking the due diligence process of their operation to their licenses itself, when it can be something that the smart contract can do by design.
Absolutely. I think, when we talk about payments, it's always about faster, better, cheaper. And that's why, that's the name of the game in digital payments. I mean, why would people use digital payments if it's not faster, better, or cheaper? And I think that is a lens that we also have to keep very closely on compliance as well. And kind of on that note, and kind of, with the panelists reflecting generally on the potential for programmability to kind of drive that faster, better, cheaper in compliance, I want to dive a little bit into use cases, and maybe I'll start with Maha first. You know, you mentioned Project Mandala, and you know, you guys have gone and made compliance sexy again. It was recently wrapped up by the BIS Singapore Center with the MAS, Reserve Bank of Australia, Korea, Malaysia. And it's really, I really love to see the regulators getting into this space, you know, thinking about compliance by design, and really about even thinking about reducing that friction of cross-border compliance with this automation and programmability. So, you know, tell us a little bit more, like, what spurred this initiative and what were the outcomes, and most importantly, what's next?
Well, the regulators were very excited by this. I mean, you know, what spurred it is the knowledge that these costs are going up. You know, we still have quite a lot of you know, issues, financial crime, etc., compliance requirements outside of just you know, the financial crime landscape, if you like. You know, just complying with things like capital flow management measures. So there's a number of different things that are, you know, that are, you know, there to comply with, and being able to, you know, stay on top of these things is also quite a burden for regulators. I think the whole idea of what we've designed is that, you know, commercial banks can actually use it to perform their compliance, but also central banks can do real-time monitoring of these checks, whether it's capital flow management measures or whether it's sanction screening. So there's a benefit to all parties by adopting these technologies, and I think that was an easy, you know, conversation to be had, and actually the outcomes that we're seeing, which is cutting down these processes, automating them, you know, really showing the interest. The two use cases that we had was sanction screening and capital flow management measures. It clearly showed that it can cut down some of these processes and reduce the, you know, the manual processing as well as the duplication. And potentially over time, as we scale this a little bit more, you could see how it could potentially cut down the duplicative steps, because everybody seems to do their own compliance processes. But if we build an ecosystem where everybody is peer reviewing it, using it, making sure that it works, regulators are involved, the vision of something like Mandela is that, you know, you only need to do the compliance checks once, and all of a sudden everybody actually trusts that this is something. Now we're a bit far away from that reality, but that's the sort of vision that we should be setting for something like a Mandela in terms of programmable compliance. Now, I need to stress that whilst there's a lot of excitement around this, there's still a lot to be done to get us there. The one issue that we have with using blockchain technologies is that some of the liability frameworks, the legal and regulatory uncertainties are still there. And only until we can solve for those can we scale these technologies and really get the benefit from them. As much as we talk about the numbers are still a drop in the ocean when it comes to the type of transactions that go around the world in the financial sector globally. So there's a real effort now for all of us to come together and work out how can we unlock these blockers to then move things forward.
Yeah, I really like what you said, you know. I think we have to remember when we talk about compliance burden, it's not just a problem that the businesses are thinking about, but the regulators are thinking about it as well. And I think, you know, that point on clarity is well taken, and it is something that is like a journey that we have to move forward, you know, in the global digital assets regulatory community. But at the same time, I mean, I think we're very fortunate in Asia to have regulators that are thinking ahead of that curve, to say, okay, you know, firstly, the first step is acknowledging that it's an issue, and then, you know, doing something in a creative way to solve that issue. And frankly, when we are talking about digital payments, blockchain, it's really about scale. And, you know, when we work with, TRM work with regulators and with businesses, they're not going to be able to screen every transaction one by one. It's all done by APIs. It's all done. I mean, I think we really have to lean into leveraging that programmability. And on that note, Tianwei, I want to turn it to you. You talked briefly earlier about purpose-bound money and Project Orchid. And how, you know, basically it was, and you guys took part in that pilot. Just, you know, you were basically one of the pioneers. And it's programmable money with pre-specified conditions. So tell us a bit about how that started, and then how can we extend this concept of purpose-bound money, or how StraitsX is doing that, extending the concept of PBM into compliance.
Thank you, Angela. Yeah, I think first and foremost, I have to say that we really benefited a lot from what the two of you have just mentioned, where first and foremost, a lot of this is a long journey, but as all regulators will be caring about, is a risk-based approach, how we have to make incremental steps to prove that certain things can be done before the next layer of rollout can actually happen. And for us, I think StraitsX, as a Singapore-based company, besides always telling people about Singapore being a business pro country itself, we have been very fortunate that we also have a regulators that has been super forward-looking, and actually there's a lot of public-private partnership that has been going on. So case in point is this Project Orchid that you mentioned. Actually, it was born 2 years ago here at the Singapore FinTech Festival, where we were the first guys that were participating in this, where the concept of trying to do programmable money in a day-to-day use cases that people can actually use. What happened then in 2022 is that all the participants of the FinTech Festivals were given off digital NFT vouchers that they can use to make purchase for goods and services, beverages, drinks, at 40, bubble tea, 20 outlets across the convention hall itself. And I believe some of you that probably here actually tried it. And then follow up with the next year in 2023, we amped up the participation with Grab getting involved and actually allowing us to do the same trial itself outside of the convention hall, where across Singapore for a 2 weeks period, during all the way to F1 before that, that users will be able to shop at participating merchants, about 200 of them across Singapore, using the Grab app, that having the same vouchers that can be used. Leading up to what actually is happening right now that we announced yesterday, that we're now embarking on a major pilot rollout with Alipay and Grab, where Alipay Plus wallet users will be able to use their native home e-wallet app when they come to Singapore, scan and pay at any Grab participation merchants, and be able to make payment as though they are using their home e-wallet app in their native currency itself. But what's actually happening behind the scene is that every single transaction is underlyingly being settled using XSUD, which is a well-regulated stablecoin issued by us. But at the same time, the concept of purpose-bound money and compliant by design is baked into this, where individual of these merchants is verified by Grab, and they are only payments for goods and services itself. And this is where we've been saying earlier on, that you're jumping on what you just mentioned, is a journey itself that takes a lot of steps, but as all regulators always comes in and think about things, it's not the job of regulators always to think about innovation, even though Singapore guys have been doing a lot. I think the fundamental key principle that I believe from our regulators' friends is about consumer protection. We want to make sure that there's a clear playing field and everyone is still protected, despite us trying to break the frontiers. No one's going to get hurt in this process itself.
Yeah, I think that's very interesting, right? When we're talking about purpose-bound money, and I think having that programmability, and people were very excited about buying a bubble tea and going on Grab, and that whole thing about doing that, like using Alipay as if you're in Singapore, as if it is back home. But I think people don't really think about, oh, actually there's a compliance element that's baked into it, and that's also very, very important. And on that note, Humphrey, I want to turn to you, because you at Partior, you guys work with some of the most highly regulated businesses in the world. You work closely with banks, with financial institutions, and kind of like operating as a financial market infrastructure, providing real-time atomic settlement in this space where compliance is really highly prioritized. How is Partior thinking about programmability and compliance?
Beware of what you wish, I would say. I think it's a blessing and a burden. I think we're operating in a ring-fenced industry, which means that not everybody is allowed to play in this commercial market space, but it comes at a price and a threshold before you can enter into the financial services. If you look at the approval cycle that our initial investor had to get from the OCC to be allowed to put US dollars on the rails, that was quite a significant journey. But at the same time, it has a benefit that once you get through it, it's a level playing field that everybody needs to meet that hurdle to protect the interest of the industry and the users thereof. So once you're there, it also has a benefit that it allows you to use that space to further innovate and make it faster, better, cheaper, and more efficient. I think that's the use case from the bilateral relationship that we have with our customers. At the same time, we're a network, and what you also see, there's different rules in different countries, and we are doing cross-border international settlements, which also means that you are faced with a non-level playing field and also a playing field where not every regulator is at the same level of sophistication as some of the regulators that are present here. So it's still a journey and a long journey to go, but I think there's more upside than downside.
Yeah, I mean, we talk a lot about high standards and you know, the burden or the cost of meeting them, but there are also benefits to be reaped on the other side as well. Yeah, we have a minute or two left, and with that, I want to kind of address a question from the audience, and kind of, you know, we've talked a lot about the use cases, and I want to throw this question to any of our panelists. Do you guys think there are any limits to programmable compliance, and is there for example, limitations to scaling the technology, or is there anything that, you know, should not be programmed? And we have a question from the audience actually about whether we can have programmable compliance without extreme privacy invasion and, well, coercive state control. So, yeah.
That's a great question. That's a great question. What we found is that the quantitative compliance requirements are easier to program. Because, you know, it tends to be easier to then be able to, you know, put the business rules around it and be able to, you know, perform the compliance. So that's why we started with sanction screening and capital flow management measures. I think when you start to look at qualitative or a little bit more complex, where you may need, you know, we're looking at the Wolfsburg questionnaire as a possibility. So you need to look at AI tools, maybe natural language processing. That's a little bit more complex. So I'm not saying it won't scale or it can't kind of move to that technology, but I think it needs a lot more work to get to that point. And in terms of, I think the second part of the question is something around privacy. Really important technology that I think we should be doing more with. Privacy-enhancing technologies. We used it with Project Mandala. It shows a lot of promise. I think it can show a lot of promise across the board, particularly when we're really concerned about data sharing and privacy preservation. We should be experimenting a lot more with these technologies, I think.
Thanks, Maha. Any quick reflections before? Yeah, I know it's blinking at us, but...
Yes, maybe just hopefully, you know, just wrap this thing up on a bit on the technology side. I think technology is always a double-edged sword, right? And a lot of way that we think about this thing here is how can you bring about reduction in costs and bring about the benefits without, you know, while balancing the risk that comes its way. I think the good way to look at it is to just take incremental step. And like my background was in engineering and programming. And if you think about it, it's just having a blockchain programmable source of as a truth actually already have a lot of helps in terms of helping to level the playing field, because you can implement controls and rules. But I think a frustration coming from a lot of our guys in practice is that you do not actually know what was the reason why a certain transaction failed. But with the blockchain openness, it actually allows a lot of this itself to be pre-programmed, and you already know why are the reasons that your transaction actually fails, which then allows you to adapt your system to make it more scalable itself.
Thank you very much, Tianwei and Maha. I think, you know, those are a lot of great insights packed into a very short 30 minutes. You know, and I think my major takeaway, it's a journey, right? We are on this journey to make digital money faster, better, cheaper, and that includes compliance. And yeah, thank you for taking this journey with us this afternoon, and thank you to our panelists for your great insights. Thank you, everyone.